Welcome back to Success with Steven. My name is Steven Smith. On this channel, we talk about everything financial literacy, business credit, personal credit, credit repair, passive income, and just all things finance. And today, we're going to be talking about something that I was asked about recently during a one-on-one coaching. I now have one-on-one business coaching to specifically talk about business credit. And someone asked me about credit card stacking. And I realized that I never actually talked about credit card stacking as a strategy and went into detail about what it actually was. So I wanted to make a video where I actually got into exactly what credit card stacking is, why we do it, when you should do it, what are the pros and what are the cons of credit card stacking. So with this video, I'm not going to be talking about starting a business or structuring your business. We've already covered that in previous videos. I'll probably link them here or they'll be at the end of the video and you can check those out after this one. But I just want to talk about this strategy. And when I talk about it, I'm going to talk about it as if the prerequisites in order to do this strategy, they are already met. So again, if you haven't structured your business, there is a video on that. I also have links in the description that you can use to help you, as well as Relay. They've given us a nice $50 sign up bonus when you open a free business bank account with them. So check that out. Link is in the description. So let's talk about what credit card stacking actually is. For most people, they just think that it is getting a lot of credit cards for your business so that you can have a high credit limit. And I feel like that's a simple, very elementary explanation of what it is. There is a method to doing this. So credit card stacking is the strategy of applying for multiple credit cards in a specific order to access a larger unsecured line of credit than individual small business credit cards can offer. And then I'm going to explain how that works. And again, we'll talk about the costs, the benefits, and when it may be and when it may not be a good option for a small business owner. Now, for most people who are doing this strategy, we're going to be doing it in the hopes that we already have a business plan, we already have a proof of concept, and we already, have a general idea about the business that we're going to be starting. Now, this is how credit card stacking actually works. First, you review your personal credit scores. You do have to personally guarantee everything. And again, you can refer back to our videos about how to structure a business. There's plenty of videos on this channel about fixing personal credit if that's something that you need to do. But you first need to review your personal credit scores, your income, and other relevant qualifications to identify cards that you will qualify for. So there is a process where you need to actually do research on credit cards and get data points in order to know which ones you can get and also which promotions will best suit you. For example, most of the cards that I look for are 0% APR. This means for a certain period of time, usually 12 to 8 months, you don't have to pay interest. Why is that important? Well, if I make a large purchase for something like, let's say, inventory for a business that I'm purchasing actual goods, then I don't want to have to pay back the money on that card right away within 30 days. I want to be able to pay it back as I'm making profit. So I'm spending money to make money and then paying back the money that I actually used on my credit card, right? That is a strategy. We're not just getting a random card with a high limit with a high interest rate. We also want to look at cards for, say, for example, your industry requires you to purchase software. There are certain credit cards that will give you 4%, 5% cash back for that particular transaction. So you want to look for a combination of things that actually, one, give you money for actually spending the credit line. And two, you also want to look for cards where you don't have to pay the interest. So you have time to actually make a profit and then you could get some cash reserve built up. Right. So there is, there is a order of operation to how you want to do this. Now, your personal credit score, it typically needs to be at least a 680 or above to get qualified for most business credit cards. And it's worth noting that, approval is not guaranteed. Just because you have a 680 credit score does not guarantee you will get approved. I had a 700 credit score and I still had one charge off remaining, and I wanted to just test on a few cards if I would qualify, some soft inquiries. I did not get approved. So even if you have a high credit score, any derogatory marks can prevent you from getting that credit card that you would like. So you want to choose between 5 to 10 cards to apply for. And again, you want to tailor these cards to your business. Not every single card that you use may make sense for you. It depends on what you're doing. So you want to choose between 5 to 10 cards to apply for. And we target business credit cards because business credit cards don't show up on your personal credit report. Okay. There's a reason why you don't want to use personal credit in order to do this. With a majority of business credit cards, there are some that do report to your personal credit, but those are ones that we would try to avoid. And this also is why we need to make sure that we're being strategic and we're doing research. You want to pick business credit cards that don't report to your personal credit. That way, let's say you make that large purchase, your utilization might be 95%. In most cases, if you were to do that to your personal credit score with the personal credit card, it would destroy your personal score, at least until you paid it down, right? And then it would go back up. It's not like as soon as you pay it back down, it's fine. So we want to avoid that. Best way of doing that is by getting a business credit card. As long as you make the payments on time, you don't have to worry about that actually showing up on your personal credit. If you default on it, then yes, it will show up on your personal credit. But if you took the time to vet your business, you have a good idea about what you're doing, the defaulting shouldn't even be on your mind. You should be focusing on how you're going to be successful in your business. We're not thinking about failing. So we're thinking about how we're going to be successful and intentional. Now, again, you want to protect your personal credit score from high utilization and high balances. And then for financing purposes, you may also want to focus on, again, 0% APR, or at least there are some credit cards where the APR is so low. Like, for example, I'm trying to think of the business credit card, but I can't think of it right now. It's not coming to mind. But there's a business credit card that you could get where the interest rate is around 2.2%. So let's say even if you didn't have 0% APR on this particular card, or maybe you've exhausted all your 0% APR options, or maybe there are no promotional options. Again, those are promotional offers that you get when they're available. Maybe that might be the best option at the time. You would want to pick the card with the lowest interest. And then you would want to see, well, if I paid this off in 12 months, how much would I pay in interest? How much would I look to profit? Does this make sense? And, it should make sense. You should be profitable and you should see more profit than the cost that it would have been to spend the credit line, right? So usually the first 12 or 6 to 18 months, there are some with a 6-month introductory period. There are some that are 9. There are some that are 12. Best ones are 18. I don't know if I've seen an 18-month offer in the last 24 months or so, but those they do come around, just depending on what's going on with the economy and how tight banks are with lending money. So once you are approved, the credit cards are issued and you can use them towards your business expenses going forward. I talked about some of the benefits of credit card stacking, but I wanted to share personally how this has benefited me. So if you are a entrepreneur and you want to start a business, I would say for a majority of businesses, you do need to spend money in order for you to make money. That is just, a truth for a majority of businesses. Either that or you have to spend a lot of time. But I remember I have a video where I talk about I was saving $15,000 per year on a low income, and I was doing things like high yield savings accounts and other things to try to, maximize off of interest and other ways to try to save money. And I was trying to save $100,000, and it was, I was able to get up there, but I struggled for a very, very long time. I was talking to someone that introduced me to business credit, and he basically was like, "Oh, I just got approved for $30,000." I'm like, $30,000? How did you get that? So he was telling me that he was applying for credit under his business. I had no idea what this was. I thought that was complicated. I thought it was so hard to get loans for your business, or that was my interpretation of what he was doing. And then also you have to pay back loans. Loans have high interest rates. My credit score is bad. I can't do that. So I kind of brushed it off. But he kept coming into work. He's my coworker, and he would a couple weeks later, I got another one. I got another 30,000. So I was like, man, in the span of 2 or 3 months, this guy has gotten $100,000 in credit line, and I'm struggling to save money. And I think that was the light bulb moment for me where I was like, okay, if time is currency, time is inherently more valuable than anything else. If it takes me 5 years, 4 or 5 years of my life to save up this amount, maybe 4, if I'm really, really doing it well, but I could get the same results just by having good personal credit and by leveraging that in order to make money from banks, especially with 0% APR cards like he was getting, that makes more sense. That was it clicked, right? It clicked for me. So in the last few months, in 60 days between 2 business credit cards, I was able to get over $60,000. So I saw, man, it's easy to get approved for 60, 100K, 150K. It's easier to get approved for that with good credit than it would be to save it. Think about it like this. How long would it take you to save $150,000? It might even take you 7 years, depending on your situation. In 7 years, if you had bad credit, most things will fall off anyway. So, I mean, just by you doing nothing, you're not even credit repair and just waiting that the 7 years, you would still have that opportunity. So it's like either way, what would prevent you from trying to have good credit when that would be a more viable option when it's very hard to save money? So that's why having excellent personal credit and having a structured business is so important. And many banks only check one of the 3 credit bureaus. Now, this is something where for this channel, we already know I've had videos that I put out on how to remove hard inquiries. So it's not like this is really like a thing for most of us, but still, let's say that you weren't able to remove hard inquiries, just for the sake of argument, right? Excuse me. Most banks, when you get business credit cards, they only pull from one bank, right? So if you do your research and get multiple cards, you could get 4 with one bureau, 3 with another bureau, 4 with another bureau. All right. So if you do the research, you can get multiple cards. Not to mention, you normally get 4 to 5 times the amount of credit line you receive on the personal side. And most people have seen this if they've gotten 1 or 2 business credit cards. You may get approved for a $3,000 card, 4 or 5, maybe even $10,000 on the personal side. But on the business side, the standard becomes like 8,000, 15,000, 20,000, 25,000. You've seen upwards of 50,000 just on the Amex. Now, this is an Amex charge card, but just on that card, I can carry over a balance on that single card of $75,000. That's on a single card. So, with that being said, these are all the amazing benefits that come with credit card stacking, but just using business credit cards in general, right? So I wanted to give a visual representation of what this would look like if you were trying to get let's say 150,000. And these cards are all, again, for example. I mean, these are cards that you can apply for, but the limits are all for example purposes. You're not guaranteed any of these limits, but these are realistic limits. I can attest to a lot of these. On the Goldman Sachs, I've gotten an $8,000 limit to start. In 90 days, I'll increase that. The Go Biz rewards, I started with 15,000. Literally, I'm going to call this month to increase that. American Express charge card, buying power, spending power for one transaction of up to 50,000, carryover balance of 75,000. For the business cash card, I actually started with a limit of 1,100, but I did figure out the reason why I started with the low limit, and that's okay though. I'm going to increase that. I actually have an old video that I did that when it comes out, I kind of talk about my strategy for that and what happened with that. And eventually that video will come out. But I'll also talk about, why that happened, and also the strategy around why we need to build relationships. That's going to be a little later. But don't take this representation as literal. Just know that it's an example, right? So you could get 4 credit cards with Experian. What you're going to notice is most business credit cards, they pull from Experian. But if you were looking at, let's say, getting 2 business Chase cash cards, the business cash, the business preferred, because you can get multiple, you may get approved for $25,000 each if you've built a relationship with Chase or you have an existing one with them, right? You may get the American Express Business Blue Card, where you get $25,000 on that. And the Go Biz Rewards Card, that's $25,000 on that, which is the max limit. And I myself got approved for $15,000 initially to start. So between all of those cards, potentially, you could get $100,000. This was all from one credit bureau, right? You would have 4 hard inquiries from all of these. You'd have $100,000. You can then go over to Equifax and you could get 25,000 with the Goldman Sachs potentially. And then you could get Truist. Now Truist is a regional bank. Again, don't take these literally. There's a bunch of different cards that you could get that pull from each bureau. That's where you'd have to do research and find which ones work best for you. But again, these are just different options. It's just a visual representation of how easily you could get up to $150,000 in credit line, and we haven't even touched TransUnion yet. Okay, so the strategy for this would be to go for cards like American Express first. American Express is one of them that's not inquiry sensitive. Okay, you could have 4 hard inquiries, 5 hard inquiries, and still get a good American Express credit limit. You also don't have to really build relationships as far as getting a business checking and depositing money in it. American Express doesn't really do that. I guess they're focused more on their credit card products, so that's not really a thing with them. So American Express is one I would recommend that you start with. I would think that would be like a really good one to start with. For Navy Federal, I would say that one is more of a relationship building. You would want to open up a personal account with them, which you have to have one in order to get a business one, but you would want to open up a personal one, maybe get a flagship checking, then a savings, and then maybe get some additional products with them. While I was rebuilding my credit, I had a pledge loan with them. I had a secured card that I graduated into a cash rewards card, and I got a Go rewards card with them on the personal side. So I got those products with them. And then I had my business account open with them for a while. And then I was able to apply for this card when my credit was up to par. They're not very inquiry sensitive. And this is also a credit card that doesn't show up on the personal side or the business side. For better or for worse, that might make sense for you. If you looked at your Experian personal credit side, you still have a credit risk assessment on there. This one doesn't show up at all. So it's pretty cool. It's like a complete phantom card. And that's just the benefit of that. But Navy Federal does not have any 0% introductory offers, anything like that. So keep that in mind. But again, this is just a visual representation of the limit that you could get approved for potentially. All right. It's not any strategy that I'm saying you can or that you should or should not do. It all depends on exactly what you're trying to accomplish and what offers are available at the time. For the business cash card with Chase, that one is a 0% APR card. So is the Goldman Sachs card currently right now. I don't know if the Business Preferred has that, but I think a majority of the Chase products that you can get do at this time. Truist also has credit cards that do have that, and so does American Express. Now, this is a business credit hard pull that I put together for just a few cards, not that many. I'm thinking about also making a list of all the cards and where they pull from. Now, when you're looking at this list, please do your due diligence, because I've seen where some credit pools are regional or state, where you may be in Nevada like me and you get an Experian pool. But if you lived in, let's say, Georgia, you may get an Equifax pool. So you do want to do research, and you want to make sure that where you live, that this makes sense, or that it's lining up with this. But the reason why I picked these 4 cards is because, for the most part, from what I've seen, almost national, this was consistent when I did some research on it. And I found 4 for each just to get you started. That may be a good idea for you to look at. So Experian Inquiry, that's Navy Federal, Go Biz, American Express, all of their products, PNC, and Chase. TransUnion Inquiry is Bank of America, U.S. Bank, BMO Harris, and Fifth Third Bank. Equifax inquiries are Marcus by Goldman Sachs, the Citi AA Advantage, Truist, and KeyBank credit cards, respectively. So you can either screenshot this, and then you can go back and do your due diligence to check and see if in your state or your area, if it's different than what we're seeing here. And again, I just made that note here to remind myself, but Chase is inquiry sensitive and American Express is not. So if you were starting this off, you may want to, start with the inquiry sensitive one like Chase first. And then maybe go into Amex, and then also look at 0% APR offers. And if you get one big limit to start, you want to be strategic. Maybe you want to just use one card, because next year you may need another 0% APR card. So if you got a good limit for like 25,000 and you know that you don't need more than that at that time, maybe consider just using that, waiting a year until that expires. Next year, get another one. Okay. So there's all types of strategies that we can do where we can make that work. You can also think of starting potentially maybe even starting a new business to see what else that you can qualify for. But again, you can screenshot this. These are just 4 different credit cards that normally pull from these particular bureaus that you can look at getting. I want to talk about the cost of credit card stacking. Now, there is a real risk when it comes to credit card stacking. And no matter what you do or how much research that you do, there's always a risk assessment that you will need to take. So if you use $100,000 worth of credit line and you can't pay it back, or if your business is not successful, you can go into real debt. And it could be, if you have good credit right now, it could put you in a bad place. If you have bad credit and you spent so much time repairing it, it could put you back into that same place. So my thing is, you definitely want to make sure that you are being responsible. I want to say something that, most people probably wouldn't say who are doing the same thing, that as I've gotten all of these new credit cards, I have not used one of them for business purposes yet. I've been using them for rewards and cashback in helping me purchase ETFs, invest in Roth IRAs, and going into my high yield savings. A lot of them have sign up bonuses, and they give me 5% to at least 3% cash back on my everyday transactions. So I pick cards in a certain order that mostly didn't have 0% APR, and that could give me a good amount of cash back for my day-to-day transactions that I'm going to spend anyway. And I have a video on that should be coming out, should be actually before this video, so you may have already seen it. But I talk about the cards that I had gotten up to that point and how they're going to make me almost $5,000 to $7,000 by the end of this year, just from me spending money the way I normally do. So right now, that's what I've used my business credit cards for. Now, I do plan on using business credit cards to scale my business in the future, but I know that I'm going to wait till I get to a certain point to do that. When I get to that point, I will be doing cards. I will be getting cards for that specific purpose to spend them and then scale. But I'm going to scale when I'm already making a certain amount of money. I have a plan where even if I spend money, I know I can pay this money back. So, most people wouldn't say that. I have not used them for anything yet, because the one thing that I realized that, and if you watch my passive income video, there are many types of things as far as passive income that you can do where you don't have to spend money to do it. It just takes time and effort. And you know, most people would rather make money quickly than spend a bunch of time starting something from the ground up, expanding it. And then when they get to the point of expansion where they've outgrown their normal business practices and they need funding to then make, to scale it higher, that's really when you really should use it. But there are some people who have a business plan and they've done the work and they have a proof of concept and they want to spend the money first and then make profit and then pay it back. So you can do it either way. I just wanted to say that for me, I think I'd rather work something first and then prove to myself that I can make the money first and then I can scale it later. I think that is the best approach, and it won't get you in trouble. So some cards may carry a low introductory rate, but after that expires, the APR may be much higher. So, if you have a 0% APR card for 1 year and you spent $50,000 and you have not been paying it back for whatever reason, eventually a time is going to come where you're going to have to pay that money back, and you're going to have maybe even 19 to 29% APR on that card. And if you let that go for a few months, even 4 or 5 months, you may get into a hole. So you have to understand that, even though it's very, very easy to get approved for these higher limits, you need to be very responsible when you're using it. I just want to say that because when I'm talking to or making these videos, I want to talk to people like I'm talking to my friend, not like I'm trying to sell you on an idea. I don't want you to just get these cards and think, oh, don't blow it. I want you to really think this out, think it through, have a plan, really, have a business strategy when you're going to do this. Make sure that you're taking, no matter what you do, you will take risk, but take calculated risk. This isn't a gamble. Take a calculated risk. This is your life and you want to be responsible with it. And I don't want to see you end up in a bad place. So yeah, just, make sure that you're using this responsibly, because all major credit card issuers, with the exception of maybe the Sam's Club Business MasterCard, they require a personal guarantee when you get these cards. And you just want to make sure that you're in a position where you can pay back your debt, because the issuer will come after you personally and you will be personally liable for that debt. And I wouldn't want to see a situation where you're forced to have to file for bankruptcy or then have to work your way out of an incredibly large amount of debt. And if you ruin the relationship with all of these banks simultaneously, you may not have many options to go back to. You may have very few options, even with repairing your credit. They may see you as a risk because they still will have internal information on you, whether you paid it or not. So you don't want to sour the relationship with all of these big institutions in one fell swoop, but that's just something to consider, what the cost is of credit card stacking. And just keep that in mind. So when is credit card stacking a good idea? I think if you're a new business owner, you won't have tax returns and you don't have any revenue that's coming in, right? So you can't qualify for a business loan. You're not going to be able to get a loan if you are a brand new business. So If you don't qualify for a business loan, if you don't qualify for business lines of credit, and you don't have any working capital, credit card stacking may be a good idea for you. Additionally, small companies or low revenue businesses that have yet to accumulate assets and are unable to qualify for traditional loans like we just talked about, or business lines of credit, unsecured ones, this is a good option to consider. And it can be a good way to get money quickly. And you can usually get approved and receive your cards in 7 to 10 business days. But again, you want to have a business plan in mind before using credit card stacking as a strategy. Now, I want to talk about the requirements of credit card stacking, which would be having a good personal credit score. So your credit report should look as follows. You want to have 5% or less credit utilization. You want to have 100% on-time payment history, no derogatory marks, no collections, no late payments, and 3 to 4 years of credit history would look very good. If you don't, that's okay. Me personally, because I've added new trade lines, it's shortened my age. My age is around like a year and maybe like 7 months. It's not, that long. And I've gotten pretty good approvals with just what I have currently. So that's not don't look at these as hard numbers. I'm just saying if, in the best case, this is what we're looking at. If you have late payments that are over 24 months old, you might be okay as well. No derogatory marks, no collections at all. None. 10 positive accounts would be ideal. I don't have 10 positive accounts. I may have like 7. So I'm just letting you know, and a lot of them were credit builders. So those can work as well. I'm just letting you know that these are all, this is ideal, but if you don't, it's okay. You want to get as close to this as possible. We're just trying to make sure you can maximize your limit. We want to make sure you can get the highest limit. We want to make sure that you get approvals and you don't have to waste time. We're just trying to check all the boxes. And then you want to have 2 or less hard inquiries if possible. 2 or less hard inquiries. So as long as you have all of these things, you are in a good position to get approved for most business credit cards. A 680 credit score, 5% or less for the utilization, 100% on-time payments, no derogatory marks, no collections, no charge-offs, no late payments, 3 to 4 years of history. But again, we know that it's okay if it's 1 to 2. 10 positive accounts. That's not a hard number. Just have some positive. You need to have some positive history, and 2 or less hard inquiries. Now let's talk about relationship building. We've talked about this in previous videos. This is something that I didn't do with my Chase card. With the Chase card, I didn't open a business bank account at first. And I just applied. I think I had gotten too excited. I had gotten so many approvals with decent limits. I just pulled the trigger on it, and my limit was extremely low. It was one of the lowest that I've ever seen. But then I also learned why it was that low. They actually were trying to, I believe I was getting I believe that it was because I put a freeze on my Experian credit score at the time. And when they tried to do the pull, I wasn't able to actually do it. I then called a week later, and then I had to talk to their actual fraud department to make sure and to verify my identity. And that was the cause of the low limit. So from what I was told, if I use the card and pay it back on time for the next 91 days, I could then contact them and look at getting I could look at increasing my limit. And if not, then I could try again in 6 months. So that's what I'm going to do. That's the plan. I don't actually need the card for anything in particular right now. But what I liked about the card was that it gave me 5% cash back on basically paying my phone bill and also paying my internet bill. And my bills are kind of high. It's like I would say almost $1,200 a month between all of those bills. So I get 5% cash back on that up to $25,000. So I believe it was somewhere around like an additional $700-800 I could make potentially by the end of the year just off of that one bill alone. So my thing is, I try to look at my bills. I pick cards where I could get almost, close to $1,000 back for each set of bills that I have per month. So anyway, relationship building, you want to open a bank account. All right. You want to deposit funds into the account. You want these reoccurring deposits made, and I would at least do this for 60 to 90 days to maximize funding. All right. So, for example, if you were doing Chase, you were doing PNC, you were doing Truist Bank. These are banks where I would make sure I opened a checking and savings. There is no particular amount that I can say you need to deposit. I have no hard evidence to prove that. But I was depositing, in most of my accounts, $25 a month, $25, $50. I'm sorry, $25 or $50 per week. So it ended up being like, just in a month, maybe 200 to 400. And then after 90 days, 1,200, somewhere around that range, maybe a little bit more. It just varies. But I would do that. It just looks good. And there is an internal bank score that all banks have. It will increase that with them because they're going to anticipate you doing this same thing for a long period of time. And banks use the money that you sit in your account for other purposes. So the more money you sit in with the bank, the more they're going to approve you for. Okay. And then I made a note here that this isn't always necessary because Amex historically, they provide high limits without the need of opening a business checking account. So again, this goes back to doing research. For American Express, this isn't applicable. So again, that may be a reason why this may be one of the first cards you want to get. Chase is also inquiry sensitive. So when you're starting, but again, I know we know how to remove hard inquiries, but I'm just saying in the case that you didn't, you would strategically, you probably would want to start with Chase first. And then because it's inquiry sensitive, get that one out the way. Then get American Express because it's not inquiry sensitive and it doesn't require the business checking. So that way you have two really good cards to start with really good limits. Between the both of those, I could easily see you doing 50 to 75,000. Or if you get two Chase cards, that could be your first 100,000 to 150,000. It just depends. So relationship building is very important. I would not skip this step. Don't be like me and make that mistake. You definitely want to make sure that you're doing this to start. And if you just want to get a business credit card without doing the relationship building first, American Express is a good one to start with. I just want to summarize everything that we've gone over today. All right. And this credit card stacking method. And again, your strategy for this is contingent upon your business. You have to do research. You have to find credit cards that pay you rewards because, of course, you want to make money for spending money. You want to make an ecosystem of every time I spend something, I'm making money. So you want to look at cards that have rewards that align with your business. You want to make sure that you're getting 0% APR cards, and you want to make sure that the bonus offers, sign-up bonuses, or the introductory offers all are in line with what you're trying to do. And there isn't one particular one that works better for the other. It's just what works best for you. So a new business can acquire $150,000 plus in 0% interest funding for 12 to 18 months using credit card stacking as a strategy. All right. Making this an easy way for a new business to receive working capital. And most lenders only check one of the three major credit bureaus, which enables you to get multiple approvals across all three bureaus, potentially getting 8 to 10 credit cards. You must have a credit profile that is going to get approved. So 680, that is clean. All right. You need that to be approved because this method requires you to personally guarantee. And to receive the highest possible credit limits, building a relationship first is usually the best approach. We know that we have some exceptions. There may be more exceptions, but you would want to do research on those particular credit cards because I can't account for every exception or every particular thing that might change. That's why it has to be tailored for you. So if you ever wanted to talk credit card stacking strategy, or maybe go over the approach that might work best for you, or which ones may work best, we can always talk about that. I have one-on-one business coachings, or you can also put comments at the bottom and we can talk about that as well. You want to make sure that your business is, again, structured properly. You want to also make sure that your credit profile is up to par. You definitely want to make sure that you have a good, clean credit profile. And again, there's plenty of links in the description that you can use as far as credit building accounts that can help increase the accounts that you have. As far as opening a business bank account with Relay, again, opening that free account, you can get $50 when you deposit at least 100. And then there are, other net 30 options and things. Links are in the description. Lots of tools and resources that you can use in order to structure everything to get the highest limits and to start your credit card stacking. If I can leave you with anything else, I don't believe that credit card stacking is the only way to make money. In fact, I'm starting to lean over to the side that unless you have a business that requires you to spend this capital upfront in order to make money, I would probably avoid it until you start a business and you're already making money and you're familiar with the industry and you're just looking for a way to enhance everything. Like if you're doing $100,000 a year and you're like, man, if I had this money, I could scale this up to $1 million. This may be a good idea for you in that case. Because I just want to make sure that, with this, we're trying to be as responsible as possible, because when we're dealing with this much in funding, sometimes, it can be exciting, but we definitely want to take the approach of caution and strategy. If you have, any other questions or concerns, please leave them in the comments. Let me know what credit cards that you're looking to get approved for. If there's any credit cards that you would like me to review or to talk about, what other types of videos that you're looking for in the future. Thank you guys for your support. Thank you for watching. You have a wonderful day.